Market Outlook. This is for the 19th of May 2025. Let's get this started with last week's numbers. And if we take a look at last week's numbers, obviously a couple of interesting development happening here. Inflation, across the board was pretty much lower than what the market was expecting. Both the CPI and the PPI was coming in below consensus here. Year-on-year CPI headline inflation number is at 2.3%. That's lower than the 2.4% numbers there. And also the CPI growth as well as the core CPI growth was below consensus as well. A little bit higher for the core CPI than compared to last month number, but for the CPI itself, it was also a little bit higher there from negative 0.1, both of them coming in at 0.2%. The PPI was actually one that's actually really interesting. The PPI comes in also a little bit lower here. Again, this is for April's number. This is not going to be factoring in the tariffs that's going to be included going forward into the future. So as I previously mentioned, this inflation number, it's not the real inflation number that we are looking out for. So I think the market is looking at that in a way that, okay, sure, we might have to do some repricing, but it's actually not that severe in terms of, okay, do we need to make that urgency there? Again, preliminary University of Michigan's consumer sentiment comes in lower than what the market is expecting. Again, 50.8%. I think this is the fifth straight drop in the consumer sentiments there. So that's also putting a little bit of a lid in terms of the dollar strength, and also the Moody's rating drop from AA1, from AA1 to I think it was from AA to AA1. That does put a little bit of a lid into the sentiment towards the U.S. economy as well. The Moody's rating drop at this point in time was attributed to slower growth in the U.S. economy. That's number one. Number two is also the increasing debt that the U.S. might have. So the Moody's rating was dropped for the U.S. That's something to consider as well. Okay. Let's take a look at this week here. We're expecting RBA to cut interest rate there from 4.1 to 3.85%. That's going to be tomorrow at 2:30 p.m. Sydney time. And that's something to keep an eye out for. A UK inflation number here is expected to go up from 2.6 to 3.3%. And we got the PMI numbers there from the Eurozone as well as the US. Now, the Eurozone, UK, and the US. At this point in time, I don't think this is actually a significant thing to look at for the market. Retail sales number in the UK is going to come in on Friday. That's something to keep an eye out for, but I think the main event here is obviously Wednesday with the UK inflation number. They're expecting a huge increase from 2.6 to 3.3%. All right, let's take a look at the Aussies here. Aussie at this point in time, still in an uptrend. If you take a look at the patterns here, we're looking at a little bit of a broadening wedge developing here. So we're expecting a kind of a wider volatility, more of a choppy market that's likely to grind to the upside there. Resistance is going to be located at 65 cents. That's not a strong resistance at all. Support is going to be at 63.50 for the Aussie USD. The RSI and the stochastics indicates further momentum to the upside for the Aussie here. Likewise with the Euro here, further momentum to the upside is expected. Stochastics is already crossing over. The RSI has not dropped below 40 on that correction on the Euro. So we might actually be looking at a potential end to the correction on the Euro. Now the volatility on the Euro here in terms of range, I don't think we're expecting a huge range to be in the focus for the Euro this week. That would actually be on the Sterling. But yeah, right now in terms of key resistance, we're keeping an eye out on 1.1275 to 1.13 level on the Euro. That's going to be our first resistance. That's going to be a 23-year high on the Euro. Once it breaks that, then we expect a potential return towards that 1.15 level on the Euro USD. Now Sterling here, this one here is still stuck with that September 24 high. That's going to be at 1.34 to 1.35 level. We got all the blocks building up there, and you can see the other blocks there. That's building up. Obviously, that's more buying volume up top there. So this is actually a buy side liquidity. So it would actually be for a resistance, and also we're very close to that premium level there. So this one here, it has to be this week for the UK for the sterling to break higher. If it fails to break higher and the sterling drops below 1.32, we might actually see a much deeper correction towards 1.31 and 1.30 on the sterling here. But if we take a look at the RSI and the stochastics here, still pretty strong. Still more upside momentum building up here on the sterling here. So we might actually see this one test that 1.34 level to 1.35 level this week on the sterling. And lastly, we have the dollar Japanese yen. For the dollar Japanese yen, we got one critical support level, that's going to be 144. Any break below 144 level, that would actually send the dollar yen lower here. So fitting with the scenario where we anticipate momentum still to the upside for the Aussies, the Euros, as well as the sterling, with the dollar yen, momentum remains to the downside, and any break below 144 will actually lead a drop towards 142 and 140 on the dollar Japanese yen. But it's very important to keep an eye out on that 144 level, because that 144 level is also where the fair value gap is currently located, and also where we are likely going to be testing the resistance that was broken by the dollar Japanese yen. It's going to all come back to 144. Any break below 144, that would speed things up to the downside. Any bounces from that 144, we might actually see if price just fluctuates back to 146 on the dollar Japanese yen. So with that, good luck with your trades for this week, and I'll see you soon.